JB here. Hope everyone's doing outstanding. March 5th, Wednesday, 9 a.m. Talk quick about some markets, some names to look at, go from there. S&P futures actually flat as I'm talking right now. Solid. It was green overnight, green after the close yesterday. Discussions or rumors that maybe some of the tariffs on Mexico and Canada or with China are going to be rolled back. Uh, so looking great, and now we have kind of a reversal here. So VIX is slightly in the green. Yields, which were lower, have which were higher this morning, have started to reverse. We'll have to see how today plays out. I'm hoping we continue to buck the trend, and the trend has been since the markets, the S&P hit all-time highs in the middle of February, that the markets haven't. The highest level of this trading session has been within the first 7 minutes of the day. Yesterday, we bucked that trend. Markets hit highs in the afternoon. Even we get weakness here today. Hopefully, we can find some support. 575 is a key area. Then we have to start worrying about that 200-day moving average. That's looming at 568 and then 563, which is the October lows. Don't want to see a break under that 200-day moving average. A break and hold at least. Maybe find some support and bounce. So just things of note. Of course, last night you had President Trump POTUS in front of a joint session of Congress, pretty much laying out the items that have already been discussed, the tariffs, some of these plans, I guess some new stuff, right? Shipbuilding. I mean, there's all these other. I don't think anything was a surprise, negative or positive. So I think that's good for markets. I pretty much doubled. I wouldn't say doubled down, but just reiterated the tariff stance. But hopefully that gets pulled back a little bit. And then Germany, there was already rumors that they were going to uh, rework their defense spending, right? So if you know the Eurozone, some of these countries have, in Germany, it's called a break, right? Defense spending break can only be 1% of their GDP. So regardless of what goes on, they can only spend 1%. So supposedly the two parties came together and are going to remove that break. So that's huge. They also talked about a $500 billion infrastructure spending in regards to, I guess, the tech space for 10 years. So you see Europe markets are soaring. DAX is up over 3%. It's funny that the DAX was up 3% Monday, down over 3% Tuesday, and then back over 3% today. So pretty interesting stuff. But with that also, yields are soaring. I think the German Bund is up most in, I don't know how many years, decades. So interesting, but maybe that can help support market prices. Yeah, so that's that. That's kind of like the overall market. The SPY, just watching those areas. 575 is a big spot here. Uh, we hit 572 yesterday before bouncing. And then it's, I put on a watch list this morning. It's like the type of environment where big can become small very quickly and small can become big very quickly. So and a lot of that is luck and timing, but luck is when preparation meets opportunity. So being in a position to play some of these bounces and reversals can be very lucrative. So kind of the same thought process why I look to lock some of my puts in yesterday is not because I don't believe there's a possibility for more downside. It's that we can have one of these face ripping squeezes and your hedge position goes from being up a couple 100% to being decimated, right? Same thing goes for the calls. So I'll continue to keep things small and look for opportunities. I was doing that on Friday with some of the spec trades where I was playing for that reversal, which happened, but not to the extent that I thought it would. And this is the type of environment that could be, can make a week, a month, a year, or it can destroy a year's worth of stuff. And the way you destroy your year's worth is by being too aggressive. All right. So that's kind of overall markets. I hopefully get constructive here, right? So you already hear concerns around well, not concerns, but now you hear the recession word being popped up a lot more. And we have that GDPnow read from the Atlanta GDP will be tomorrow I don't know if it comes out at 10 o'clock. And then we get the jobs report on Friday. So those are kind of big catalysts there. And then we also have Broadcom earnings after the close tomorrow. That might help put a floor in the AI space, especially with some of these names that have been taken on the chin, like NVIDIA, so on and so forth. Yields bounced a little bit yesterday, nothing crazy there. And then I posted this. I don't know why I didn't have it on the rant yesterday, but just some comments. I forget who I pulled this on FinTwit, but this is from the ISM survey on Monday. But just interesting stuff to see some of the concerns around the uncertainty around tariffs, right? Uncertainty for markets is never good. So hopefully we get some clarity on some things. All right, so now overall market. First, quick lemonade all the way down to $32 yesterday, and then embarked on a $6 rally all the way into the afternoon, hit 38 and change. Pulled back a little, closed up 4%. Good, great sign there, especially considering it's a high shorted name. So the fact that you can find a bid amidst the market weakness. Still my 45 strikes. Those are still up over 100%. I locked some of those in already last week. And I wanted to get April strikes, but the strikes only go up to $50. So emailed the CBOE. Sometimes they'll add strikes above that. The funny part is there's above $50 strikes on the March strikes, but not on the April. So if it breaks over 40, maybe I'll look for some more March strikes to play for a continuation of the squeeze. A great story. Still holding the 50-day moving average. Good sign there. And then Arista Networks. So with the market kind of finding a bid, a little after the noon hour, I added some. I was looking for calls to play for a bounce, and Broadcom was running, and they have earnings, so the premiums are kind of tough. I was looking at Caterpillar, URI, but instead I went with Arista Networks. So by 1 o'clock, I had the strikes. By 3 o'clock, I was able to close some out for nearly 100% to cover some costs. Held the rest into today. This morning, UBS upgraded the stock to buy from neutral. I think they raised their price target to 117 from 112. I think it was going to bounce even regardless of the upgrade, but hopefully that helps put a wind in the sails. I don't know what the call is going to be at the open. I would assume they're going to be 150% or so. I might lock a few more in at the open and then ride the rest. I think it could trade north of 90. And then also Broadcom earnings could certainly help push it even higher. But at the same token, the market's spies back here in the red here, this in the pre-market. So the volatility here makes sense to kind of keep things small. So that's kind of the thought process there on Arista Networks. And then some of the other names. So JPM, I got those put hedges Monday afternoon with the market showing weakness and we were breaking support. And then, I thought maybe 2% tomorrow, yesterday, maybe another 1%, 2%. It's not the most volatile name, these, especially JPMorgan. And sure, it was down almost 5% yesterday. Pretty much right after the open, it tumbled. I was able to lock some of my puts out for a couple 100%, then some more for 600%. And then once we started to bounce into the afternoon, I locked the rest out for 500%. Doesn't mean I don't think there's more downside. It's just we could have a reversal and these things squeeze, and then your puts, which are up a couple 100%, are not up anymore, right? And then you're kicking yourself. And not only that, then you chase the calls, and then we bounce, and then we have a reversal we had at the end of the day yesterday where the calls get decimated. So for me, keeping things nimble, keeping things small, locking some in when you can, cover costs, things like that. But if JP Morgan shows weakness, that's right here, it's flat here in the pre-market. I wouldn't be surprised to see it trade into the mid 240s this week if the market continues to have pressure. So don't be surprised they add some more spec calls. Same with Visa. I was looking for another put hedge yesterday as the market was finding pressure at the open. So finally got some Visa puts and finally able to make some money on it. Within 30 minutes or so, I was able to lock some in for 100%. And then I held the rest into the afternoon. Once it started to get a bid, I closed the rest out for a small game. Didn't want to lose the profits. Again, don't be. It's funny. The headlines on Visa was like, "Oh, it's selling off because of the cross country transactions are under concerning because of the tariffs." And it's like, I don't know if that's really the reason. I think it was just finally coming under pressure with the rest of the market. But if we do have continuation, I could see this falling at least possibly down to its 50-day down there at 333. So that's Visa. Just other names quick. Intuit got an upgrade this morning. Thankfully, I didn't get the puts yesterday. I was looking at them. It did the same thing yesterday. It gapped higher. It had an positive analyst note, just adjusting a price target, and then a reverse course. I think it was 609 yesterday, and then went all the way down to 587, 610. If it does a deja vu here today at the open, I might finally pull the trigger on some puts. Certainly, it looks like it wants to fill the gap from earnings. That's Intuit. And then a couple other quick names. PVH, which I haven't traded Ralph Lauren in years. I used to trade it a lot. For some reason, it had a lot more volatility and liquidity on the options. It doesn't anymore, which is kind of shocking. But stock is up like 100% over the last 14 months. And you look at names that might come under pressure. And this was my thesis, or at least why I was looking at puts on Deckers back in December, and of course missed that one, is because of tariff concerns. And even if there is no tariff concerns or that will weigh on suppliers and things like that, I mean, just have to think the market's might price some of that in. You look at a name like Ralph Lauren, where a lot of their clothes are manufactured abroad, right? And then there's lots of logistical concerns. You would think the cost concerns that come with that, if there are tariffs, what does that look like for a name that's up over 100 whatever percent? So don't be surprised if I add some Ralph Lauren puts, right? It's 50-day moving average 252. I think it could trade down to 220. Only monthly strikes. So at least that will offer a longer term hedge as opposed to getting weeklies. And then last but not least, Stratasys reported earnings this morning. I mean, the stock has been off its highs despite that huge $150 million investment. And then the company had announced guidance, which I thought was great. And then this morning, posted a strong beat, reported inline guidance for 2025, and the stock's lower in the pre-market. And that's despite the stock selling off from 13 at the start of February. Still have my the last of my freebie March strikes. If it reverses into the green at the open, I might look to get some more strikes on SSYS. And I think that's it, folks. Let's have a great day. I'll be back on later. Rock and roll.